This is Professor Russell James coming to you from Texas Tech University. Welcome to today's lecture from Visual Plan Giving, an introduction to the law and taxation of charitable gift planning. Welcome to Charitable Gifts of Homes and Farms with Retained Life Estates, Part 2, Calculating the Deduction for Farmland. This is Professor Russell James. Transferring the remainder interest in farmland generates a charitable deduction even when the donor retains a life estate in the property. But how much is this deduction? Certainly, the deduction will be less than if the donor immediately gave the land to the charity, but how much less? The deduction will be the present value of the right to receive the land in the future. This present value depends upon the current value of the land, the interest rate, and how long the charity would likely have to wait to receive the land. In other words, the life expectancy of the donor if the donor is the measuring life for the retained life estate. As a practical matter, the calculation can be completed by identifying the interest rate, known as the Section 7520 rate, found on the IRS website, and then using the interest rate to identify the correct remainder percentage for one or two lives or a specific term from the tables at the IRS website. Let's walk step by step through the process for completing such a calculation. Suppose we wish to calculate the charitable deduction for a remainder interest gift in $100,000 of farmland given by a 59-year-old donor on January 31st of 2017, where the charity receives the right to own the farmland upon the death of the donor. For this calculation, the age of the donor is the age at their nearest birthday on the date of the gift. First, we must identify the appropriate Section 7520 interest rate. Following the link at the IRS website, on January 31st of 2015 displays the table containing the Section 7520 interest rate. The donor can choose the interest rate from the current month or the previous 2 months. In this case, the interest rate in the current month was 2.4%, and the interest rate in the prior months was 1.8% and 1.6%. Which interest rate should the donor choose? For gifts of remainder interests in homes and farmland with a retained life estate, the charitable deduction increases as the interest rate decreases. Consequently, the donor should always choose the lowest available interest rate. The gift to charity is calculated as the present value of receiving the farmland at its current value when the charity must first wait for the current life expectancy of the donor to expire. If interest rates are very low, for example 1%, then the cost of waiting is also very low. When the cost of waiting is low, the value of a gift requiring waiting will be relatively high. When the cost of waiting is high, for example a 10% interest rate, the value of a gift requiring waiting will be relatively low. It may help to think about the present value of a remainder interest gift in these terms. How much money would a person have to put in the bank today such that it would be worth $100,000 at the end of the current life expectancy of the measuring life? If the bank paid 1% interest on the account, then a larger initial deposit would be required than if the bank paid 10% interest on the account. Similarly, the present value of a remainder interest gift with a retained life estate is higher if the prevailing interest rate, also known as the Section 7520 rate, is lower. The impact of different interest rates on the charitable deduction for a remainder interest deed can be seen dramatically in this example. If the Section 7520 interest rate used is 11.6%, then the deduction for a gift of a remainder interest deed with retained life estate in $1 million of farmland by a donor aged 59 is $156,840. If the Section 7520 interest rate is 1.0%, the deduction is $804,790. Since both of these interest rates were, at different times, the actual Section 7520 interest rate, this demonstrates real differences in the deduction of otherwise identical transactions. This is also why gifts of remainder interests in homes and farmland with a retained life estate are so attractive during a low interest rate environment. This remainder interest giving technique is useful to keep in mind during such times because other more common techniques, such as charitable remainder annuity trusts, are often less attractive during a low interest rate environment. Understanding the relationship between interest rates and the charitable deduction for gifts of remainder interest results in selecting the lowest available interest rate from the Section 7520 table in the current or previous 2 months. In this example, the lowest interest rate is 1.6%. Consequently, we will use 1.6% as the interest rate for all subsequent calculations in this example. To find the percentage of the value of the land that will be deductible with a remainder interest gift, we must download the relevant table. Links to these tables may be found at the IRS website. The tables provided allow calculations for a remainder interest when transferring at the death of one person, at the last to die of 2 people, or after a specific number of years, that is, a term certain. In the current example, we are calculating the deduction for a gift of a remainder interest in $100,000 of farmland given by a 59-year-old donor on January 31st of 2017, where the donor is the measuring life for the remainder interest. Consequently, we will click on Table S, which contains the single life factors. If the remainder interest would transfer to the charity at the death of the last to die of the donor and the donor's spouse, for example, then we would need to click on one of the Table R2 links. In this case, the first one because it contains the remainder factors for a 1.6% interest rate. Clicking on the Table S link downloads an Excel file. The first task is to scroll down through the Excel file until reaching the portion of the table labeled as Interest at 1.6%, because this is the Section 7520 interest rate being used in this example. In this section, the row associated with the age of the donor/measuring life shows a remainder interest factor of 0.71057. In simple terms, this factor means that this remainder interest gift will generate a charitable tax deduction of 71.057% of the value of farmland. As you can see when scrolling through the table, the charitable deduction will be larger when the measuring life for the remainder interest is older. This makes sense because as age increases, life expectancy decreases, meaning that the charity will, on average, receive the property earlier. Once the remainder interest factor has been correctly identified, the calculation for the deduction is simple. In this case, the donor can deduct 71.057% of the value of any land in which he makes a remainder interest gift subject to his lifetime right to use the property. Thus, the charitable income tax deduction for such a remainder interest gift with a retained life estate in $100,000 of farmland is $71,057. This has been Charitable Gifts of Homes and Farms with Retained Life Estates, Part 2, Calculating the Deduction for Farmland. Join us next time for Part 3, Advanced Planning Strategies.